What's going on, guys? It's Killer. Welcome back to the channel. Now today we're going to be covering Bitcoin yet again. We're going to be looking at the overall market structure. I'm going to be covering a couple of scenarios which I see developing on the mid to higher time frame as well as the higher time frame as well. And we are going to be looking at two very key important pivot points going into next year around February and March period. Now, just to recap what we went over in the last video, I believe we posted around late November to early December, and I was expecting somewhat of a bullish narrative into FOMC, but we didn't have to create the bullish narrative. What we were primarily looking at here is the reaction after FOMC, and it's safe to say that that update was spot on, right? What we were expecting FOMC to have somewhat of a bullish narrative and then a retracement to the downside, because as I always preach, news is priced in, and pretty much we hunted the highs and we saw exactly that and a push towards the downside. And as we can see, history often rhymes, and the past 4 times we saw a similar drop after FOMC, which is why I was expecting something similar yet again, because if the pattern isn't broken, you trade the pattern until it is broken. So what am I looking at the moment here? Well, if we're just looking at market structure and nothing timing related at the moment, we are in a time-based capitulation range, right? We've had this initial push towards the downside, minus 35% from the highs. What do I think? I think we're entering into a bear market as of now, just based on market structure alone and the clinical nature of we have 3 bull years, 1 bear year, and 2026 is going to be that bear year. But bear in mind, I didn't turn bearish here. I was preaching this when we were at 120k, and one of the updates on my channel was documentation as to why I was so bearish around this upper region, and now we are seeing the fruition of that movement here. So what do I expect to happen in this range as of now? Well, I think we're going to continue to range, right? We haven't been in this range that long. Let's just measure from here to here. We've been in this range for about 30 days here. And if you start looking at comparisons, and a comparison which I want to look at briefly here is what happened around this January 2022 period around here, and how long we were in this big range before having this next leg down into a bear market. If we start measuring this move, we spent about 3 months within this range before having this break towards the downside here. And if we start comparing the similar type of price action to what we saw here to here, it is very, very similar. Like I said, the market is often rhyming and repeating the same things over and over again. This is why it's important to look at previous and past fractal analysis, is because that's where the real edge lies here. So if we start looking at what happened here before we had this next leg down, we obviously had our reaccumulation. Well, we had a leg up, reaccumulation, expansion, short-term distribution, push down. We had redistribution. Redistribution means we're ranging, accumulating liquidity before we have a continued measured move towards the downside. In this case, we spent 3 months. And like I said, measuring this move, we've been in this area for 30 days. Now, in regards to where this range is going to extend down towards, if we start looking at the similarities here, we actually formed a range here after this capitulation candle and then broke the lows and formed this range before continuing down. So if Bitcoin is unable to hold the 80k region, let's just be theoretical here. We are still in a range. Our range highs are around 94 to 95k. Our range low is at 80k. We haven't hunted this area yet. As we can see, sometimes we hunt these lows multiple times before having a push towards the upside. We can see the two areas and pivot points which I am observing next year, and we'll get over to that in a minute. So what do I expect to happen? Well, if we start testing these lows here, 83.6 is going to be quite an important area just from a structural standpoint here. Now, you already know me, I do not like to set limits. I like to observe the price action and enter manually when I'm looking for longs or short positions, right? So if we do eventually start getting back down to this area, I'm not going to place a long limit and just blindly hope that the price bounces. What I'm going to be looking for is I'm looking for the initial reaction around these lows. If we deviate below the lows and then we reject the lows after I've entered, right, well, then I'm going to be in a loss. The trend's going to continue down. What I'm looking at here is acceptance above the lows into a bullish retest, and then I will trigger into long positions. So if we do have a sweep around this 83.6 region, I'm going to be observing that area. If we have deviation into acceptance on the lower time frame, I will trigger into a long all the way up to the range highs again. Again, like I said, we're still in a range, and around these range lows is where people are going to capitulate. Now, if we do not reclaim the 83.6 region, then I expect a completely different scenario to play out, which I'll go over right now. In this case, if we cannot hold this 83.6 region, well, guess what? That leaves this low exposed at 80k. And as we can see, we had multiple hunts at the previous lows around here, just as we had multiple hunts at the highs. And this is typical when we are hunting liquidity. So if we can't hold this area, we start pushing down and having a sweep. Again, I'm not going to trigger on the drop. I'm going to wait for that bullish structure, wait for that reclaim, and then I'm going to trigger into that long position. And this is where it brings me to my next pivot point, which is around February, March. Now, we do have FOMC around January 28th. That is going to be my next important pivot point. As we can see, multiple reactions. We have 5 to 7% measured moves towards the downside around after FOMC based on this clinical behavior, which we are seeing right now. But the reason this is going to be quite an important area here is because it's Q1 going into Q2. And what I expect to happen here is somewhat of a redistribution pattern where we continue in this range. Now, if I go over to the weekly time frame, because that's probably a better time frame for me to analyze here, what I'm expecting is I'm expecting this prolonged range chop of the highs and lows. Then once we get to this region in February, March, I'm expecting that lower high to form. I'm expecting the final lower high to form before we trend all the way down to below 69k, 68k, right? I'm expecting this to happen in terms of where it is from. Like I said, it depends on how the range distributes here. If we start looking at what happened previously in the past, if we are here instead of around this price region, it means we have one more leg down before having that range. And this range is going to last approximately 2 to 3 months in redistribution before having this massive measured move towards the downside if we follow the clinical behavior of how cycles react here. So if we're around this price region, well, then that means that we're actually going to break these lows here, break that 80k region, which we've marked, and we're going to form a low somewhere around this price region, around below 80k. Then we are going to have this prolonged range. If that is the case, and if the current low at 80k doesn't hold, that means the range is going to be within a lower region. You wait for the range highs, range lows to form, and then you trade the range. But the moral of the story, in terms of what I'm looking at here, is I'm looking at these two pivot points because this is going to be a key structural time period for where we are going to have significant volatility. So mark it on your calendars here. We're looking at February, March. This is going to be the area to observe. Now, if we start pushing upwards to this area, I am going to be looking for swing shorts all the way back down to around 60k. If we start pushing downwards into this region, then I'm going to be looking for longs into this region as well. Now, like I said, these are the pivots I'm paying attention towards on the higher time frame because at the moment we are still in this choppy range, and this is what I'm looking at for my next big swing. I did make a video before in terms of why I was swing short around here. Did take a couple of weeks, but we did eventually drop 35%, and that played out perfectly. So going into next year, they are going to be the two important higher time frame pivot points I am observing. Moving forward, just to analyzing the structure here, we have our highs very distinct around that 94k region, just slightly above the yearly open. We have previous lows around here, which we have swept as well, and we have our previous wick low here. So it's quite simple. When it comes to analyzing the market structure, I'm always looking at the weekly here. If we lose this low, well, guess what? There's nothing next apart from 80k. Lose 80k, well, then guess what? We're going to start testing these previous lows around here, right? So I'm always looking at the weekly time frame. If we start looking at what's happening on the weekly here, we can see we had an indecisive close. We pushed down, pushed up, closed indecisive. Next candle opens, sweeps the external highs into FOMC, closed bearish. The next candle opens, we have a quick sweep of the highs, and then we push all the way down to the lows around these previous areas here. So this was quite an important area to observe. Again, lose this area, well, then we're looking at 80k. Hold this area, then we can expect a sweep of the highs around this 94 to 95k region. Again, if we start looking at previous imbalances as well, we can see we have an FVG around this price region of 96 to 97k. So as I've always stated, look to capitalize through the external range hunts. This is your internal range. This is your external range. capitalize at the lows around the external range lows and external range highs, because this is where big players like to scale, because liquidity is likely to be very thin because a lot of people are getting stopped out around these areas, and this is perfect for somebody who wants to scale large position sizes, especially when the order book is thin. So that is what I'm looking at the moment. When it comes to my higher time frame outlook here, I am looking for triggers above the highs, triggers above the lows, and my next pivots are going to be around January. I'm going to be looking at around February to March for the next continuation to the downside. And just before we wrap up today's video, I'm going to quickly draw my overall thesis of what I expect to happen in a timing based format here. So in this case, I'm expecting this prolonged range to last around this area until February, March. March is going to be the area where we're going to have that pivot before we start pushing towards the downside around the 72k region, and then we're going to continue to range a bit, but then ultimately around September, October, or matter of fact around August is where I'm expecting that bottom formation to be around that 50 to 60k region. So we'll have to see how high this high goes. Like I said, I've drawn mine at 96k. We could extend all the way up to 98k, close to that 100k region, but ultimately I'm expecting this lower high into continuation of a bear market similar to what we saw back in 2021, just because of the clinical nature of 3 bull years and 1 bear year. And so far I have been correct since this 35% retracement. In validation of this bearish idea would be reclaiming above 100k, holding above 100k, and if we can hold above, then I'm expecting a continued push to a new all-time high. If that happens, I'll completely be invalidated of my bearish thesis, and then instead we will likely have this redistribution like this, where we have this, and then we have our reclaim, and then our new all-time high. And if we do this, then that means this is an unexpected scenario, because this has never happened before on our 4th year. Our 4th year has always been a bear market. Also believe in the 4-year cycles, but not just because of the similar pattern which is occurring each time, but because of macro cycles as well. So in this case, if we do reclaim the 100k region, my bearish thesis will be invalidated. But I'm quite confident. This is what I'm looking at. Hopefully this helps, and I'll catch you guys later.